The next halving is something that's got the entire crypto world buzzing and is set to happen in 2024. Now, if you're not familiar with what a halving is, don't worry, we'll get to that in a minute. But what you need to know right now is that the next halving could have a huge impact on the price of Bitcoin. Will we see 100,000, 500,000, or even a million per Bitcoin? Impossible to say. But whether you're a seasoned crypto investor or just starting out, buckle up and remember to push that like button. The Bitcoin halving event is an essential aspect of the cryptocurrency's protocol. It is a process that reduces the mining reward for every block mined on the blockchain network by half. This event occurs approximately every 4 years, or more precisely, after every 210,000 blocks are mined on the Bitcoin blockchain network. To understand the significance of the halving event, it is essential to first understand how new Bitcoins are created. Bitcoin mining is the process by which new Bitcoins are created and added to the existing blockchain. Miners compete to solve complex mathematical equations and validate transactions on the network. When a miner solves a puzzle, they are rewarded with a certain number of Bitcoins. The mining reward is currently set at 6.25 Bitcoins per block, but it was initially set at 50 Bitcoins when Bitcoin was first introduced in 2009. The Bitcoin halving event reduces the mining reward by 50%, which means that miners will receive 3.125 Bitcoins per block instead of 6.25 Bitcoins. This reduction in reward also reduces the supply of new Bitcoins entering circulation, which can have a significant impact on the cryptocurrency's price. The significance of the Bitcoin halving event lies in its effect on the cryptocurrency's supply and demand. When the supply of Bitcoin is reduced and the demand for it remains the same or increases, the price of Bitcoin can rise sharply. This is because Bitcoin becomes scarcer and investors perceive it as a more valuable asset. The previous two halving events have demonstrated this effect. The first halving event occurred in November 2012, and the mining reward was reduced from 50 Bitcoins per block to 25 Bitcoins per block. At the time, Bitcoin was still a relatively new and unknown asset, and the impact of the halving event was not fully understood. However, in hindsight, the event can be seen as a pivotal moment in Bitcoin's history. Following the event, Bitcoin's price began to rise steadily, and the cryptocurrency market as a whole began to gain momentum. The second halving event occurred in July 2016, and the mining reward was reduced from 25 Bitcoins per block to 12.5 Bitcoins per block. By this time, Bitcoin had gained mainstream attention, and the event was highly anticipated. The impact of the halving event was felt almost immediately, with Bitcoin's price surging to new all-time highs. The third halving event occurred in May 2020. As you probably remember, this was in the peak of the pandemic. The price initially saw a brief increase followed by a sharp drop. In the months leading up to the halving, there was a lot of speculation and anticipation about the event, with some investors believing that it would lead to a significant price increase. However, in the weeks following the halving, the price of Bitcoin dropped by over 10%, from around $9,000 to below $8,000. This was likely due to a combination of factors, including profit taking by investors who had bought in prior to the halving, as well as general market uncertainty and volatility. Despite the initial drop, the price of Bitcoin recovered relatively quickly, and over the following months it began to climb steadily. By the end of 2020, the price had surpassed its pre-halving high, and it continued to climb in 2021, reaching new all-time highs above $60,000. During the next halving event, the block reward for mining a new block on the Bitcoin blockchain network will be reduced from 6.25 Bitcoin to 3.125. This means that miners will receive half the number of Bitcoins they were previously receiving for their efforts in verifying and processing Bitcoin transactions on the network. Based on the current rate of block creation, the next halving is estimated to occur in May 2020. If history were to repeat itself, this could mean that we are soon to be set for a new crypto bull market. However, it's important to keep in mind that there are several moving parts in this puzzle. While some are certain that Bitcoin will go to the moon, others still describe it as a modern scheme. Let's take a look at 5 bull and bear scenarios for Bitcoin. Increasing mainstream adoption. As more people and businesses adopt Bitcoin and other cryptocurrencies as a payment method, the demand for Bitcoin is likely to increase, which could drive up its price. Scarcity. Bitcoin has a finite supply with a maximum of 21 million Bitcoins that can ever be mined. As we approach the limit, it's possible that Bitcoin's scarcity could lead to an increase in its value. Institutional investment. As more institutional investors, such as hedge funds and pension funds, invest in Bitcoin, it could increase its legitimacy as an asset class and drive up demand. Decentralized finance. Applications built on top of the Bitcoin network could increase the use cases for Bitcoin, which could in turn drive up demand. Geopolitical uncertainty. Bitcoin has been dubbed digital gold by some investors, as it can be seen as a safe haven asset in times of geopolitical uncertainty. If there are global events that shake confidence in traditional currencies or investments, it's possible that more people could turn to Bitcoin as a store of value. Regulation. Governments around the world are becoming more aware of Bitcoin and other cryptocurrencies, and some are considering implementing stricter regulations or even outright bans. This could reduce demand for Bitcoin and impact its price negatively. Competition. While Bitcoin was the first cryptocurrency and has the largest market cap, it's not the only player in the game. There are many other cryptocurrencies with unique features and benefits, and if any of these gain significant traction, it could reduce demand for Bitcoin. Technological limitations. Bitcoin's blockchain technology has its limitations, including its scalability and high energy usage. If these issues are not addressed, it could hinder Bitcoin's growth and adoption. Volatility. Bitcoin is known for its extreme price volatility, which can make it a risky investment. If investors lose confidence in Bitcoin's stability, it could lead to a significant price drop. Environmental concerns. Bitcoin mining requires a lot of energy, and concerns over its environmental impact have grown in recent years. If these concerns lead to a backlash against Bitcoin and other cryptocurrencies, it could negatively impact their value. Investing in Bitcoin before and after the halving event requires careful consideration and strategy. Before investing, conduct thorough research to understand Bitcoin's fundamental and technical analysis. You should also be familiar with the different ways to invest in Bitcoin, such as buying and holding, trading, or mining. It's crucial to have a diversified portfolio and to avoid overinvesting in Bitcoin. Investing in other cryptocurrencies or traditional assets can help spread your risk and protect you from potential losses. In conclusion, the Bitcoin halving event is a significant event for every investor in the cryptocurrency space. It can provide opportunities for investors to make profits, but also comes with risk. Understanding what a halving event is, its importance, and strategies for investing can help you make informed decisions and navigate the volatile crypto market successfully. We hope you enjoyed this video. Make sure to like and subscribe if you want to see more content like this in the future.